TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. Basil Chapman, Tiger Technicians Hour. Dow's up 71, S&P's up 4. What a market. What a market. Got Yellen testifying. Testifying, I guess is the word. And so far, the TLT is up 38 cents at 128.37. So bonds are holding quite nicely. Gold is down a little bit. This is going to be quite a fascinating close. Why? I was asked via email a little while ago, how come with leg D's in the Dow, the diamonds, the S&P, SPY that we're expecting, I didn't go short via one of the instruments that are a volatility instrument. Very good question. Actually, not for a second did I even think about it. I don't want to go short right now, even though we have to get a weekly sell signal. Now, let me put it another way. We still have to get a peak C, meaning that for one whole week we do not make a new recovery high. My bias is to be looking to the upside until we've completed leg D in the weekly charts, and that'll be leg E probably in the Dow. And at that point, absolutely, I'd be looking to go short, but I just didn't want to do it. Now, yeah, you could have a trade, a very nice trade percentage-wise, just as the general market pulls back. Maybe a couple 100 points in the Dow, maybe 20 points in the S&P. But I just don't see it right now. New sectors all the time are breaking out. No, sectors are starting to break out. New sectors in the terms of placing it in the category of they might have had a recovery, but they haven't been leading sectors. Now there's some sectors that have the potential to actually be leaders. Also, of course, I didn't want to go short because I have in place my Chapman Wave trend gauge, which has been just demonstrably accurate for so long. And it was flashing the other day, 2 days ago. I said within 2 days we should get a very strong move that it comes off maybe the lows, but it should take the S&P futures up 7 to 9 points, and that should rub off onto the cash indices. So at this particular time, what do we have? We have the Dow up 78 at 18,194. You have the S&P up 5 at 2114. You got the comp index just up 2 at 49.83, lagging a little. You got the VIX index down 39 cents at 14.17. To me, that's very important. The futures are up 5, the S&P. You've got the bank index, and this is going to be really important. Why? Because the XLF, well, the chart I'm showing right now is of the E-mini, which is in leg E. It could have recycled, and that's another reason why I didn't want to go short. The MACD is still very strong. Stochastics at 98%. So 98% says, hey, be careful, because at some point you're going to go from the 98% at least to the 50% area, and then possibly even down to the 20% for an oversold reading. But until that starts to turn, this is very positive. Another reason why is that the 120-minute chart finally broke that little rectangle formation in a cup formation. It's got the Chapman Wave cup and ladle, which says you should go to at least leg D, and then you can start considering whether or not you're short. So let me put that aside and show you something that's even more important than anything else here, and that is that the XLF is starting to move beautifully. It went to a leg C in the daily, and the weekly is improving. Monthly is saying, hey, nice action in February because January was terrible. And then you've got this cup pattern in the XLF 120-minute chart going from the peak E high of 2457 double top and those two candles, the 120-minute chart, all the way down to the 200-period moving average in the 24 area, 2408, I think it was, 2407. And now we're in leg B, stop dead at 2458. It needs to maybe digest a little bit and then soar through. If it snaps through, that's a Chapman wave cup and ladle pattern in a price time match. Maybe it'll be earlier than the price time match to the right side. And if that's the case, it should go to a D in the 120-minute chart. Hey, Dow's up 85, S&P's now up 6. This is nice action. And if the XLF is participating, I think that is very important. So now let's go on, and we're going to go to the TLT. TLT right now showing some kind of support from the double bottom down to the 125.92 area that was made in the 17th. Nice leg A counter trend rally at this particular point because the weekly chart definitely said that was a peak E, and the monthly chart is still early because we've got the whole week to go before we have a decision. But I can't see the bonds breaking 138.50 via the TLT 20-year T-bond fund. So I think we've got a peak D in the monthly. We'll see. Meantime, back at the ranch, you've got, and let me show you bonds themselves. Bonds, yep, same sort of thing. And I've got this as a chart pattern formation. That's a possibility over the next few weeks that there is a bounce to the 147, 148 area in bonds, which will make it about 2.5 points to the upside. We'll see. Meantime, we've got something that's really exciting. Finally, we've got leg D in the daily chart of the continuous contract in copper. And that to me is really important. Why? Because this is leg B now in the weekly chart, and finally we're going to test the 9-period moving average on a closing basis coming this Friday, because we've not closed above it since, this is impossible to believe, but we haven't closed above it since the week of 22nd of August, where it was at 3.25, 3.13. Unbelievable what a move down this has been in high-grade copper. So that's a good sign. I want to see copper moving higher. Where am I? So, dollar. So now we're going to go to the dollar. DXY. That's the continuous contract. What am I doing here? DXY. There it is. Yep, trading range. Remember I said that it's just stuck in this trading range, and the euro should be doing the same thing. Euro on the bottom part and the dollar at the top part, and we'll see. No, nothing's changed. Yep, it's the same thing. And then we're going to do the USD, JPY currency pair, US dollar, Japanese yen currency pair, also just trapped in this H pattern that goes to an M pattern in the weekly chart. Eventually it should pull back. I'm not sure when that'll be. And am I missing anything here? What am I missing? I don't think I'm missing a thing. I do want to just do the continuous contract of gold. See, the gold, it was down, and then Yellen spoke about inflation and kaplop. The dollar, which had gone, gold, which had gone down, suddenly goes whoosh and tries to spike. And then what does it do? Starts to fail a little bit. Question in the den about the CME. So this CME has had a tough political time with the whole thing of this is a CME group based Chicago Mercantile Exchange. A whole bunch of things were going on. It came down very sharply. Now it's having a great move up. Is this old leg E or brand new leg A? I don't know. All I can say is the MACD is very good, stochastic's very good, and the weekly chart is in F/B, and the monthly chart is in wow. The monthly chart is in G/B. Oh, this is going to be very interesting. Very interesting. One of the reasons we have not gone short any of the indices is that I just don't think this is the time. I think we've still got upside to go before we have quite a sharp pullback in March, and then we'll see what happens if we're going to go to new all-time highs, how long it takes for a consolidation, etc. So CME is at 96.59. up $1.60. I would have to say that this is very good action, but I know this chart pattern well. I'm going to draw it in right there. And that says there's a chance that if it's leg E, you will know because it'll pull back very sharply to between 94 and 93 and a half. And that it should happen by Friday. And then it'll take out the low of 92.48. My suspicion is that this is actually a Chapman wave stork leg formation, and that this could turn out to be E, but we could pull back and then start another ABCD to the upside over a period of time, or and that would be a little bit like a Chapman wave stork leg formation, but that's just a hint right now. Normally you get some filling in going into the 95.5 to 94.50 area, 94.30 area, sorry. So acting very well. If you're in it, just stay long. So that was that. Okay, now let me show you something that I thought was really interesting when I was going through my different charts. The IWM seems to have recycled, is in F/B right now, with the MACD still good and stochastic at 97%. Leg D in the weekly, that is for me very clear, leg D in the weekly, at least at this point. And the monthly chart made that Chapman wave leg, body, now starting the neck formation, and that's a big positive. When you go to the QQQ series, this is still leg B. It's unbelievable to believe that in this environment you could get an index that has gone since the 9th of February. No, I'm going to do it this way. I'm going to say from the low bar of the 2nd of February at 99.75. The QQQ Power Shares QQQ Trust Series ETF based on the NDX 100 has gone to a peak A at 104.17 on the 6th, pulls back for 1 day, and other than that has had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 sessions with only one of those sessions making a peak. That is extraordinary action. I heard something about 2010 was the last time that happened. Well, it doesn't matter when it happened before. What we're looking at right now, I believe it's still in leg B, and that gives us time into next week probably. I don't know, but I'm thinking maybe into next week before we can get to leg D and maybe a peak D. Wow, there's a bunch of action here that is quite startling, actually. So look at the NYA. NYA, this is the New York Stock Exchange. In leg E could also have recycled, but it's E right now, and it's at all-time highs. So you've finally got the New York Stock Exchange at all-time highs. And I believe this is leg B in the weekly. I'm calling it leg B in the weekly chart. Very positive. This is all very positive action. What can you say? And then, for those of you who don't know, there's a thing called the XMI. XMI is a major market index. It used to be a major force, at least for me it was, for a long time. And then it kind of just faded into the background. Well, if this is going to be some kind of a proxy on a broader, it's only 20 stocks, but it is such a mix of those 20 Dow-type stocks that I consider to be a really important index, because it has the defensive type stocks as well as the secular cyclicals mix. And I'll come back in a moment. We'll talk about it.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So the question was two questions. One is, why didn't I go short on the leg D? And the answer is that with a stochastic at 95%, yes, it might turn out that, say, in the XMI or in the let's call it the SPY. Let's see, where's the SPY? Yep, leg D. The stochastic's at 98%. MACD's still good. This is just, I don't think this is the time to be looking at the short side, not just yet. There will be an opportunity. So when I go back to the XMI, which is, it has American Express, Boeing, Chevron, DuPont, Disney, Dow Chemical, GE, Hewlett-Packard, IBM, J&J, JP Morgan, Coke, McDonald's, Triple M, Merck, Microsoft, Procter & Gamble, WFC is the bank, Wells Fargo, and Walmart and Exxon. Yeah, that is an incredible mix. That's just like the perfect, what do you call those things? Defensive index that you could have, because it's got it'll help you with the cyclicals, and it'll hurt you with a sector like Exxon's acting very weak right now, and IBM has been very weak, but it's got participants that are doing very well, like DuPont, and Boeing was doing very well. Express was doing very well. So, and Triple M is doing very well. It's really great, and it's telling me that there should be a move in the XMI Major Market Index above 1920.90 was the high the week of the 26th of December, and there should be a leg D. And that's in the weekly chart, and I'm waiting for that. And when all these things come together, I think that we're looking at a good chance of, like the SPY is in leg C right now. You've got to go an entire week without a new recovery high before you can consider that there is a potential for a top. And that's the top that I would rather look for, on the short side with the volatility index. Yeah, okay, I hope that answers that. Next question is, where is the QQQ in relation to the 120-minute chart? I've got this right now as possibly leg E. It might have recycled. I don't want to even think of it recycling just yet until, by changing the name just yet, until I have a little more evidence. They could, because the Dow is up 0.47, the S&P is up 0.26. There's a divergence here that's not that great. I don't like to see it. So what I'd like to do now is to go to John in Philly, because we've got something really interesting to talk about, I believe. John in Philly, how are you?
Good morning, Basil. Thanks for taking the call. I do have a question on something interesting. It's the bond market.
Yes.
And I wanted to ask you a very specific Chapman Wave toolbox question as applied to the bond futures contract, and the ticker symbol on that would be ZBH5.
Okay. ZBH5. Wait a minute. ZBH. I don't get the ZBH.
Zebra Boy Harry 5.
And which contract?
I'm sorry. On your system, it may be USH5.
Okay, yep, that's exactly what it is. Okay. Always wondered when I see these ZBs and I don't get anything, I thought I'm missing out on something. All right, fire away.
You certainly are missing out. Yes, indeed.
Okay, give me your question.
Basil, you taught me and others long ago the utility of tracking markets that are trending relative to their 9-period exponential moving average, EMA.
Yes.
And you were the first person I ever saw use that particular parameter, the 9-period, on the EMA. Yeah. And over the years, I have been simply astounded how markets that do trend, how very, very often a market will walk right up or right down respecting a 9 EMA.
That's support, yes.
That's just a statement of observation, and kudos to you for bringing that up to your students. Now, real time, the bond futures contract has declined from a peak near 152 down near 144.
Right.
During the month of February, we bounced right up to the 9 EMA. Why
Exactly.
is the bond, in your opinion, not of sorts right here against that 9 EMA?
Great question, and I'll try to answer it as soon as we get back. We've got John in Philly, Basil Chapman, Tech Editions out, Dow's up 88, S&P's up 6, and I will be back trying to answer the question.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with John and Philly. We're looking at the bonds. We're looking at the TLT. I happen to have the continuous contract because the actual chart formation is precisely the same as the actual futures contract. And what's really important about bonds at this particular point is that you've only had a trough B form. You've gone all the way down from 151. Let's call it 151, 28, 30 seconds of the continuous contract in the USH. I just want to show you how close it is. That high was at 150, 128. So I'm using the continuous because I've already got that notated, and I've got it notated way back years and years, and that's good. So what's happened is the decline was so serious that it went down with only one tiny little trough made on the 4th of February, where it hit 148.18. 30 seconds. Next, they went to 148 and 23 seconds, 30 seconds higher in the Jamaica trough, and then it continued down without a single trough until on the 18th of February at 143.25. Now, two things happen. In a very sharp move to the downside in the Chapman wave, if there is a severe decline with only one trough or maybe two troughs, you have to be aware that any sharp rebound has the potential to become an even greater rebound and become a buy signal to a buy mode when the severity of the decline is matched by only two troughs. And I'm not sure why that happens. I noted it years ago, and I'm always impressed at how that happens. However, what is really important is that you have to look at the next time frame. And you'll see in the next time frame, which is the weekly chart, John, what I've done is I've made a rather large, I've given it the benefit of the doubt. Actually, to my eye, that was way too high. I'm giving it a slightly smaller arch formation. And that says over the next week and next 2 weeks, maybe 3 weeks, there's a chance that starting from the low bar of last week, where the low was 143 and 30 seconds, that we're getting a bounce here that can go to the weekly 9 EMA at 146 and 30 seconds if certain conditions are met. But let me just put this into perspective, because your question and your particular answer is that you're already short. And what I wanted to say to you is, this is leg D in the 120-minute chart. It's gone in a very wild, I'm not even going to be able to call it a stair-step move. And this is one of the few problems actually with the Chapman wave methodology, in that it identifies that you can go to a D, but it doesn't say in going to the D, you can almost come back to each trough after the peak is made. And it's very hard to stay in the position. Even peak C went all the way to 145.5 down to a low of 143 and 30 seconds, when the actual low itself was 143 and 30 seconds. Yeah, so it's only 30 seconds higher, and yet it still has managed to go all the way to this leg D. So now let me do this. I'm going to say to you, being short on a shorter term basis right here might not be such a bad idea for two reasons. One is I'm anticipating that we're only going to get one more leg up in the weekly chart of the S&P and the Dow. That's number one. Number two is, if all of this week the S&P is not able to, I need to just clarify the exact number. I don't want to just guess it off the top of my head. No, it's too late. So this is leg D in the daily, and leg C is already continued. That means you cannot get a leg D until not next week, but the week after that. That's the second week of March.
The week of Monday, March 9th, right?
Yeah, so that's in my work, and that says two things. Number one is that let me just put this D in here in the S&P just to show you what I'm doing. So on a very short-term basis, there is a chance that we could start to pull back now, and that could go into next week. And that would say that bonds, if anything, are actually going to have a bit of a rally. And the other is that the market is recycling in some of these indices like the Dow INDU, which is now, like the Dow INDU. No, it's also in D. So all I can say to you is that when I get a sell signal based on the weekly charts, and I might be wrong, maybe this is leg D and it makes a peak D and it's more powerful. It's more powerful than the weekly, which S&P, which doesn't have to go to D. I just don't see that. If it's going to be a more serious sell-off, it's almost certain that you have to get D in the S&P. That's the way the Chapman wave works, and I have to stick with that methodology. So all I'm saying to you is that because there's internal strength in the general market, enough to meander for a week or two within a trading band, not that much lower in the lows, but not all that much higher in the highs. Bonds are also trapped in this narrow range, and therefore going short on a very short-term basis, you're actually looking at this more as a potential for a turnaround to retest the lows and probably break the low of 143 and 30 seconds. Is that correct?
That is correct. And let me ask you very specifically. Your 9 EMA, I'm in the Tiger's Den, and I'm using this beautiful tool of TFNN's, the Tiger TV feature, where I can see your chart. So I'm looking at your chart and make note that 145.17 is the 9 EMA on the daily charts.
Okay,
So here's my very
let me just double check here because mine's being covered right now. Yeah, 17, 18. Yeah, right there. Yeah, it is 17. Correct.
My very specific question, using your tool of trending markets and 9 EMAs, shorting bonds here, which I know you're not recommending, I'm just taking a stab myself, but shorting here close to and against this 9 EMA, I wanted to ask you very specifically, what sort of rules of thumb can you offer that would, in your mind, set the stop loss appropriately? How far up and over that 9 EMA mark would you think is a worthwhile stop based upon your experience of markets and 9 EMAs?
Okay, two things that are very important. One is Fletcher in the Den, who's also a student of the MACD and the stochastic, has pointed out, and this is something that I had mentioned the other day, but I'm going to point it out again, is that the stochastic is at 11% and it's flat. It's not making that V-shape pattern, but the on-balance volume, that blue line that you can see in the left side chart is my daily. The one in the middle is the weekly. This one over here is the 120-minute chart, and right over there is the monthly in leg E, possibly making a peak E. We'll have to wait and see. So now it's a great question. So here's my answer to you. For bonds to really pick up and garner the kind of move that is a breakout to the upside, as well as showing that it has the sustainability to rally all the way to this candle, the long-legged doji candle of the 9th of February, with a high of 148 and 9/30 seconds and a low of 146 and 31/30 seconds, I would have to see two things happen, and they need to happen really quickly. One is by this afternoon or this morning, without breaking 145, I want to see bonds get to about 144, 24, 30 seconds. Really, to be safe, I'd say 146, go over the bar of the 17th, 146 and 430 seconds, and close there in this leg B. At the same time, the stochastic has to go from 11% to 15% or higher. 15% or higher is really important. And I need to see the histogram. This line right here is called the 0% line of the MACD. I need to see that histogram, see the price of the MACD go above from down to plus in the histogram. And then I would say to you, now the market is going to show even less upside potential. Doesn't tell me much about the downside. Other things do. And at the same time, bonds are going to be where money is migrating back into bonds and out of stocks. So I said there were two things. One is the flatness of the stochastic has to change. It has to go quite sharply over 15%, but 20% is where it starts to go. The stochastic, not the price of the bonds, but the stochastic itself goes from a buy signal to a buy mode. And you want four things together to get a buy mode in bonds. That's really what you're talking about. What would change this from just a little bounce into some kind of a buy mode? Stochastic has to go over 20%. Stochastic first has to go cross positively. It's done that. Then it has to cross over 20%. It's way off that. The MACD then has to turn up. And the fourth thing is you have price movement commensurate with the technical improvement. And that would say that bonds would have to get to at least 146 for me to feel that this is going to be more than just a bounce to leg B, that it could go to C and even a D. Most importantly, 146 and 430 seconds is the 9-period moving average in the weekly chart. I'm suspecting that it's actually going to be because that was the low of last week. I have no choice but to put the arch formation. But my guess is that the arch formation is going to be over here from there, the first week of March, into into March itself, I'm going to see a pretty decent rally in bonds up to the 147.5 to 148.5 area, or maybe even higher, depending on how the market pulls back. So, answer to your question, your stop should be, I would actually put my stop just above the high of the day today, 145.18. I put it 145. 25, 145, 27. Why? Because if it closes up near the high of the day, there's a good chance in the morning, our market, the QQQ has been up, 16 sessions or something. And I just mentioned that out of 17 sessions, it's been up 16. You're going to get some kind of a pullback at any moment in the QQQ series. I'm not saying you are. I'm saying you should. And that says that if the QQQ series, and Apple in particular, and it was pointed out to me, it made a round number high yesterday, a close and high of 133. Well, today just took it out. It went to 133. What was the high today? 133.60. So there's still internal strength. So I'm thinking that the short side of the bonds in the short term, and I really mean short term, is not bad. I think that I'd have a little patience, but I'd be looking for bonds to pull back as this market goes a little higher. But
Basil, thanks so much for sharing your thoughts. I will just mention on the side, every time I listen to you speak, I learn something new. And in this particular case, it was that description you had made of the 8-point decline in those bond futures over the past month.
Yes.
And how it had only made 2 Chapman wave troughs, A and B. And with the moves such as that and only 2 troughs, your observation that sort of phenomena can often lead to a more substantial bounce. So thanks for sharing that little nuance. I appreciate that.
Right, and just to finish off, even now with the Fed chairman and everything that's going on, I would actually have thought bonds would have pulled back, but they are rallying. So that's just saying to me, I think that maybe we're getting a little bit toppy in the market shorter term. Bonds can have a little bit of a bounce, but then I'm expecting higher highs in the S&P and the Dow and the other exchanges and the QQQ series, and that's where I think the real test of bonds is going to come. I wanted to just add one thing, and I almost forgot, but thanks for giving me that moment. I don't believe we're going to go very much below 143.25 in the bonds. If we do break down, we might go to a leg C, a trough C, and at that point, I think in the TLT, if I can use that, most people look at the TLT. The TLT says to me 126 to 125.5, maybe 125, is going to be the really important support. I think it's going to hold for a pretty nice bounce in the TLT. That's the way I'm looking at it. Now, I am talking about a bounce. I haven't said to all-time highs. I don't know yet. I'm just, at this point, I have to say bounce. Hope that helps.
Very much. Thank you, Basil.
Thank you for calling. Always appreciate your calls and some pretty intensive questions, and I hope I answered it. So now let's go to a couple of things that I wanted to do while I was thinking of this. XLU is the S&P Select Utility Spider Fund. Well, you've got the same kind of bounce occurring in the XLU. It's at 46.34 up 34.30 seconds. The 120-minute chart is only at A, peak B. And what's really important about the XLU is that 40.98 is the 200-period exponential moving average. I'll try to talk a little bit more about this before we come back from a break. And don't forget, folks, we've got programming all day, and you've got straight after me Options Exchange, and that should be great. Fabulous program, one of the best options programs. I'll be back straight after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and yes, so a couple of things. XLE, made a peak D, is pulling back. The weekly chart, see, here's that H pattern that goes to the lowercase m pattern, the weekly chart, and the monthly is really very poor. Now you've got the XLE, which has made a trough E before it rallied. That tells you can go to a stronger rally, and that's exactly what it did. When over the previous arch close there, now it's testing that very important 9-period moving average. What is the XLE? It is the S&P Select Energy Spider Fund. Now, talking about energy, let me just tell you that Andy Hecht has an upcoming webinar. What are energy technomentals telling us? Plus a free report, Crude Oil, What Every Investor Needs to Know, Wednesday, February the 25th at 5 p.m. to 6 p.m. And if you've listened to Andy, you know that he is conversant with the stuff that we would, as lay people, just, you don't even think about it. I mean, just the different months, the tango, the contango. I happen to like the merengue a little bit more than the tango. But the way we're looking at this is that what you see is not always what you get. And if you know the details, and if you know the internals, and if you know the fundamentals together with some of the technicals, Andy's the guy that puts it all together. So please take this opportunity, check it out. Now, I also did a webinar just this past Thursday night. I believe you can still get it. And you will get a month of my newsletter free. This webinar was based on the 1928-29 matches and mismatches, as well as the chart formations, and what my prognosis is, the kind of waveform that I'm looking for and patterns that we're looking at that I anticipate coming up over the next 6 months or so, 3 months and 6 months, and looking out, and what we're looking for in terms of the identifications for the major top potential, and it has to do with a whole bunch of socioeconomic and political things. I actually didn't get into the politics of it. I thought, you know what, politics is so ephemeral. I'll do it in my show at some point, and it'll be talking about the presidency and what one can expect and why. That's what I'm going to do later on. Maybe in March, maybe in April, we'll see. So, okay, back in the ranch, let me just do this as we're about to wrap up. I believe it's Chad Coco coming on as a host today. As always, he does a fabulous show for the Options Hour. That's brought to you by Think or Swim. I just want to go to the VIX index. I would not be surprised if we were really close to some kind of a pullback. Yes, so I told the person who asked me about the volatility. I said, you know, maybe there's a shorter term trade. He has his stop in. I think his stop is good. So let me do this. Basil, have you ever taken ballroom dancing lessons? Yes, I have taken ballroom dancing lessons, and I've always been an improviser. It's very difficult for me to stick to the rules. I think you can certainly tell that through my work. I have to create my own rules, and then they're very strict. We got to the tango. I was doing kind of okay without very few improvisation, and then we did go to the merengue, which I really loved, but that's where we stopped. And I can't remember if we stopped because of me or because something else came about and we ran out of time. But we've been discussing, my wife and I, going back to ballroom dancing at any point. And I think we'll be doing it soon. Okay, so that's the VIX index. And the VIX index has gone down 42 cents today at 14.14. It's telling me that there's selling pressure, but the flat stochastic says you might get a bounce, but we're probably gonna have to do some retesting, and that could correspond with kind of a short-term pullback, a day or two coming up maybe, and then we'll see whether we go to new highs or where all of next week is lower highs, because then you get your peak C. The following week, you can get your leg D in the S&P, the diamonds, and the SPY. Meantime, back at the ranch, if by the end of the day, the VIX index closes closer to 14.90 or 15.25, that'll indicate that we've got a little bit of a turn. But as long as it stays here in the low 14s, that's positive for the market. Hey, I'll be back. I'll be back this afternoon with Tom O'Brien. And otherwise, you'll hear me.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.